Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So welcome to the forecast for trade week call. Today's 15th of May. So we have the Q&A window open. We have the chat window open. You guys could do me a favor, please put the questions in the Q&A and I will post as a first kickoff surprise Telegram channel master link, something I seem to do every weekend because I'm really trying to drive the attendance and subscriptions up to all of the subscribers. Now, in all fairness, we are looking for a new platform to communicate, but something tells me even if we do get that platform set up, that the migration to it will not be the fastest, right, so to speak. So I don't see or anticipate Telegram going away anytime soon, but as I talk a lot about in risk management, we could always be wrong. So let's go into the Forex factory counter. I'm going to show you guys a few other things, bring in some discussion of what's gone on so far this week. So for once in a while, we don't really have much on the calendar next week. So I would say feel free to trade, Sunday through Monday, Tuesday. Hey, it's one of those things where just understand as we start rolling into Wednesday, historically, the trade win rates, depending on almost all software and or just manual trading, it just isn't as high as it is earlier in the week. And that is a statistic that is very well known among some top traders in almost all markets. Okay, doesn't mean you can't be great on a Thursday or Friday. It just means that statistically, a large data set has shown us that. So I always will say, hey, if you're coming into the week, regardless of what you're trading, whether it be manual or some version of automated, you're accepting trades, always know where generally the charts will be on a large day time frame. I will never, nor can I, take the place of the developers. I mean, these guys know the chart patterns, especially in the case of two of our pieces of software. They're relatively new to our mix. They trade one currency in most cases, right? Now, in all fairness, Stratamus has the ability to trade a couple others, but just look at the flat numbers, and they are it's mostly just trading the Singapore dollar. So this is the news events next week. Do make sure you're always clicking on this box. Sometimes I even get caught looking at the wrong week, so you can just click forward to the next week. If you're looking at it on Saturday, make sure you filter out for stuff. So before I get into the charts, let me just show this as well. This is Telegram. For those of you that are not subscribed to this, this is the Market Watch channel that I run, but you want to be subscribed, in my opinion, to all of the channels. The vast majority of our software not only has a regular channel like Gearbox as an example, it also has a chat room for it as well. Okay, and just like Arrow, this is one of our more lively chat rooms. I think there's actually some really good traders in here, so forth. My channel, if you are ever hunting for stuff, you just click on anywhere in the header here. It'll bring up the basics of the channel. But more importantly, I've got some files I uploaded, some recent technical analysis files, and I've tried to post links to this in the other Telegram channels. There's actually some really good stuff in here, cheat sheets, so forth. I have this posted in many different areas, but the same thing can be said for, you can just click on the photos to see different photos I've shown. Recently, I've been trying to bring in some more broad news. I thought that this inflation rate, now, the problem with inflation rates, just to understand, generally what's going on is the argument really arises, well, who's compiling the data, right? So if I ever show anything by Charlie Biello, is one of my favorite research analysts on the street. His data is usually some of the best. This guy's won the Charles H. Dow Award, which is a big deal in analyst land for his accuracy of data. So if you're ever looking to follow somebody, Charlie's one of the best. So these are his numbers on the global inflation rates. He has very popular following on Twitter. You know, looking a little higher than we thought. So what does this mean for currencies? What does this mean for my trading, Steve? Well, in my genuine hope that all of our subscribers sort of get in tune with what's going on global macro, right? Just try what I talk about. You understand how inflation affects currencies. And it can be negative or positive depending upon, you know, generally when you see inflation, and we can go to the cheat sheet for it's in files. And here it is. This is the Forex cheat sheet. It's actually one of the best I've ever found. I've been dragging this thing around for about 15 years, but man, if I had only had something like this in macro and microeconomics classes in college, it'd been so much easier. But it just shows the relationship between supply and demand and how that affects currencies. Do you have to have this memorized? No. Do I think it's a really good piece for just broad knowledge and understanding whether it be GDP or its relation to the devaluation of an underlying country's currency because if they've taken more debt or GDP has decreased, right? It's much more in the news type of stuff recently. So just know those resources are available. Highly suggest you take advantage of them. So we've got a lot of subscribers on the call today, so I know we've had a lot join. Welcome. I'm Steve. I'm this risk guy. I do this for a living. I talk to you guys twice a week. So let's go into the charts. S&P. Do note we had a pretty big correction last week, albeit big just in the scope of the fact we've been nothing but going higher, right? But this is a pretty decent correction we saw. Notice it stopped right on the lines. Boom, reversed right back up. Hit the 50-day and a resistance point. There's actually some other stuff here on the market profile chart. It just ripped right back up. NASDAQ can't say the same thing here. So, you know, why is this important to currency land? Well, it isn't as important, but we have a lot of equity traders out there in subscriber land, and is more than likely going to be an area that, from an educational perspective, and maybe at the very least a you know, like a manual trading type of area, you know, we're going to try and take a closer look at crypto. We're going to take a look at trading in equities as well. So I think it's interesting to understand the dichotomy and the changes in that between two indexes. So you have one that had a big correction, you had one that came back up, and this is looking kind of double topish. And, you know, we'll see if we can break out on the NASDAQ. Who knows? Seems to me like we need a final rip higher in equities globally, at least for developed markets, before I think we see the final sort of shooting star top for a while, and then a pretty decent correction coming in towards the end of the year and possibly into 22 as well. So just a quick peek at bonds, still stuck inside the range, both 7 and 10 year. These are both US Treasury markets, very important to currencies and commodities, but nothing that's taken us outside of the norm that would have me saying maybe this is a new leading indicator for us, which has definitely happened historically in relation to bonds, currencies. Start off with the DXY. This is a dollar index. Looking at a daily chart, each of these represents a single day, up and or down. Whatever the hell we call this green color. This looks like the color of my mom's teal Honda from the early 90s, but it means that it's an up day. Red candles mean it's a down day, and we're still holding. You know, we had a pretty decent reversal off of a center point from a previous balance area. That's what this whole 93.35-ish area represents. We've dropped a whole $3 from this level. I do expect this, if we switch over to the weekly chart, to go back down further. I've been talking about this insanely long time, and it's sounding like a raging broken record. But I think it's important to understand the relationship of this currency first and its weakness generally throughout the entire, that's going to wag the tail, if you will, of a lot of other currencies next. Now, certainly news stories will break. Politics will change. Certainly Brexit could take front and center stage. That's possible, which case, this takes the backstage or some sort of back burner action, as we call it. But looking to ideally be down somewhere in the 85 range. So just know this, when this does break, guys, this is probably going to be quite vicious in its descent. So you want to be really cognizant of what's going on here right under this 90-ish area. We start going down, we have the final bastion of the 200-day brown line here, and then it's sailing, in my opinion, all the way down into this lower range. So if we break on this, understand the euro represents about 60% of this index. So if we break, euro's headed higher. I would be uninterested, regardless of how great the software is, to be stepping in front of the freight train on that. So with that in mind, let's take a look at Euro USD. So this is the opposite of this equation. Let me just drop back to the daily chart. I always recommend doing daily analysis first. You can certainly drill down into a 4-hour, 1 hour, whatever smaller time frame, but the higher the time frame, generally, historically, the better and more solid the pattern is that's setting up, and the more it can be sticky, if you will, in terms of support and resistance or fibs or moving averages or RSI or market profile. There's just an absolute plethora of stuff that can be, but ideally, regardless of any of those or whatever combination you use to sort of put everything together in the aggregate, it is most important to find areas of confluence on a chart, which is nothing more than where a whole bunch of things line up, right? So as I say, that the difficulty is not learning candlestick analysis, right? There's a quick refresher on that. Hey, Steve, you're like super prepared today. Yes, I am. I'm messing with slides today. So this is a candlestick chart. I think it's probably big enough to be able to be viewed. Can you guys see this? It's the candlestick chart here. So this is part of my daily notes because I just got a question on this. So in the back, every week I update these notes. They go in. I try hard to just sort of summarize the entire week with these notes. You can see currency trends. This link is here to FX Street. It's actually pretty slick. But most importantly, I always want my best traders in this group are the ones that take a look at these notes, just like absolute a plan of attack, if you will, or our war plan, if you will. And then with everything that's related to our 5 pieces of software, you can find on each of the developers' own Telegram channels. Forex cheat sheets in here. And then I don't really get into, I used to post a lot of stuff, but the developers post their weekly notes, some point throughout the weekend, and probably best to just force you guys to go to their Telegram channel and, get the notes from them at the very least, but ideally want to listen to their calls each week. So in any case, these are candlesticks. It's not a difficult thing. I've posted a 168-page analysis if you want to do a deeper dive from the Asian guy that founded this type of analysis a long time ago. Since you want to focus on the body and the size of it, higher low close, right? So if it's green, essentially it's opening at a lower price, ending at a higher price, even though it may have ranged all the way up to this higher down to this low, it closed right here. Whereas a red day is the exact opposite. It opens higher, it closes lower, forming the red body to the candle. And then you have this lower wick. Some people call them shadows, whatever, range. I just call it a wick. So the upper wick on the high, and then the upper shadow. A ton can be discerned from the relationship between these patterns to each other, okay? And that's why I posted a lot of that in the Telegram about patterns. The vast majority of all any kind of software, most cases at least, in any markets and or mentors globally, they almost always want to start you with the basics of technical analysis. And that's understanding, in my opinion, candlestick charting first, and then its relationship of each of these patterns to a previous day's candle and or a previous pattern or a group thereof, right? And then once you learn all that, you can sort of figure out how the moving averages play into it. You can overlay RSI and Bollinger Bands and Keltner channels. I mean, this goes on and on and on. And I have, much more sophisticated versions of these charts and other software that I have on my other system that is probably very confusing to many. At least it certainly was to me in the beginning. So just understand that this is a path. It is a plan, if you will. On your legacy building plan, you really need to grasp, in my opinion, even if you have versions of the software that are just really doing well and don't require a lot of maintenance, I still think if you have extra time, which I know almost everybody in this planet does, even though they say they don't, they have the time, and we could find it if we did a forensic look at your calendar, right? I actually have literally one of my busiest clients, doctor. He runs 6 practices. He's got 5 kids. And his wife has a job as a lawyer. So you can imagine how busy these guys are, right? But he still finds the time to pull off things like coaching and all kinds of stuff. So it's there if you can. It's there if you can make it. I promise you, you have the time. So let's go a little bit into Euro USD. Stuck in a larger upper range here. Not much to say. Stuck in the range. Euro GBP. Got a request for this. Let's start with daily. Again, lower range, acting quite well. Here's the upper range. Ideally a little bit higher, in my opinion, where both these resistance lines lie. Lower range, right in this 85-ish area. You want to move to the weekly. Again, you can see how over a long period of time, hell, we can even go out to monthly. Each of these candles represents a month. So ideally, your big range is that 91.10-ish area, all the way down, probably even lower than the line there at about the 82, 85-ish area. That's a monthly chart for each of these candles represents a month. Back it up to weekly. You can see the same range. A lot of times if you toggle between the two, right, you kind of know where the big picture level is. 84 seems to me, if you look at 84 on the monthly, drop back to looking at 84 and where it's positioned on the weekly, that if we get under that, it's probably going to sail all the way down to the 83 area, would be my read. But this thing's acted quite well. I mean, obviously, to remove the pandemic nuttiness, right? And it's actually acted fairly decent. Problem is, a lot of software just doesn't like trading this pair. Euro JPY. Let's go to the daily first. So we're up here in nosebleed section, so you got to drop to the weekly. Pretty big resistance right here at 33. Maybe a chance for us to balance out, which I mean nothing more than just stopping, if you will, in on this lift and just balancing out for a period of time. So we got a euro, we get through that. Let's take a look at the pound dollar relationship. Still in that upper zone. We get above 41, it's gonna rip. Where? It's probably going to tear all the way up to the 42-ish area. Anywhere in that 42.50-ish area would be my target. Anywhere between that and 43. It's a pretty big area, but that would be my target. GBP CAD, or sorry, pound CAD. CAD CHF, let's drop back to daily. still in the upper range. GBP CHF, again, these are just daily charts, still in the upper range, nothing crazy. See how when it's, you know, in these upper ranges, and I'm not sure about this one, but all the previous ones I looked at, it's a lot easier for you to, you know, if you're accepting trades and you have just the basic martingale system, and, you know, let's say you have the type of software where, you know, martingale is going to trade back and forth between a high and a low. You know, I'm more comfortable accepting trades on both sides when I see these chart patterns, you know, bouncing around in a tight upper range or bouncing around some sort of lower range. I'm okay with that. As soon as it starts to break these ranges, though, and the longer the range, the more there's probably going to be some sort of zipper move outside of that. And in many cases, you'll often hear me talk in the past, especially in a lot of my futures discussions, about what's called OTF. So OTF just stands for other time frame players, right? Meaning that if we stayed inside of a particular range, like right here is an example on this GBP JPY chart, you'll see that we came up towards the top of the range. We had a couple of dojis print, which are very small body candles. And essentially when these guys print, let me get a bigger range on this. When these guys print, it typically tells you, not always, that it's an indecision. Now, we were against arguably a pretty big range. And, you know, as many currencies have been much stronger than the yen, you know, it just leads one to believe that we're probably going to break, you know. So a lot of people are like, well, when does the institutional money came in? Well, we had probably had a little bit break here, but notice we had no, I mean, we had all these dojis print. They're not all perfect dojis, kind of mess, but whatever. The point is I'm just looking for the fact that we closed mostly indecision. This is when the institutional money came in right here. Took us up into another area. This would be a time when, knowing all this, I would not be accepting any shorts pretty much in any of this entire pattern right here, by the way, right? Now, one could say, well, you could have accepted shorts here and you'd admit, yeah, absolutely. But statistically, the odds are against you for something like that. I'd want to see these days play out mostly on the long side. You know, and this is where, in my opinion, non-flexible, non-trending martingale systems get in trouble, right? Because they're just not willing to adapt. It seemed to me that if I was some algo-based programming developer, which I certainly am not, because I cannot code, although you'd think I watched enough movies to learn how to do it, I would probably be focusing on things like candlestick pattern in my algo, like, you know, no volume came in. Look, we finished flat. Well, that tells us that we got above, and it's like you're peeking your head above the wall, but the bullets aren't hitting you in the head. So it's probably okay to jump over the wall, right? And that's essentially when the institutional money starts to come in. You guys can see this pattern play out thousands to thousands of times in anything that trades over the last, you know, 10 decades. Stuff's been trading, right? In some cases, you know, it wasn't that much stuff trading back, you know, towards the beginning of the 1900th century, but, you know, people still put a technical analysis based chart on it. All right, let's see. USD JPY. Move this back. This was the breakout that I've had multiple teaching examples about this. You can go back and see every weekend that I've talked about this. It's just a beautiful example of a step down in a trend down based channel that broke, and then institutional money just ripped this thing higher. Now, again, no surprise, right? If anybody been reading the tea leaves on the rottenness of the yen, which is surprising because the dollar's been rotten too, right? But the yen's been rottener. So if you've been reading that in the tea leaves, you're already hunting around looking for this, right? When this thing broke the trend line, it started, some crosses took place and so forth. It just absolutely ripped. It's a great example of something I never want to be in front of, right? You may dodge some trains blasting by you on the way up here, but eventually you're going to get hammered. So I'd rather just ride it up. All right, so thanks for this. Yes, you are welcome. Welcome to the team, brother. Happy to have you. Spread the word. Spread the word of education. It is of paramount importance in all of investing. All right, so this is just a quick look at CAD. I wanted to show this because this broke. We're looking at the daily here first. So we broke the pattern, did the same thing, kind of talked about that a complete opposite side of the movement in a down, poke down underneath the level. There's a whole bunch of other stuff down here too, longer time frame stuff, and then other time frame players just stepped in to take us lower. Want to ride the wave of that. Weekly chart. Now with this one here, I'm not going to overlay it, but you can probably pretty much tell that movements up here, real outliers, right? Pandemic related, right? Movements down here now on the weekly chart have gotten very stretched, okay? We're at a point of support here in a big way on the weekly, plus we're stretched. So I would expect, could be wrong, I would expect this to hold this area for a little while. You know, who knows, unless the Biden administration decides to come out with stimulus package number whatever. I've lost count. What are we on, 4, 5? You know, it's continuing to devalue the dollar. Canadian's been strong. Take a look at the monthly. See if there's anywhere down at this 1 spot 20 area. Yeah. Support. Probably accept both sides of trades for at least a little while, but this one I'd be on high alert. Essentially what I would have sown. I would probably move this thing up to DEFCON 4 in terms of your keeping an eye on it. Now this is a great example of a very long basing pattern. Okay, very well acting. It's easier to see on this monthly because we're at support. Anything out there that's trading dollar Swissy, this whole 88 area is really it. When we go into this area, that's all bets off. We're probably going to move. But noticing, unless you really stretch it out, you don't really have a lot of moves in this that are just really volatile. I mean, even during the pandemic here, and arguably one of the bigger candles we've had 5 years. This was a real exogenistic event right here in 15. You can read about it. A whole bunch of stuff might pop. Now, let's drop back to the daily Australian US dollar relationship. Upper tight range, same thing. Aussie in many cases has been pretty strong if you look. What else is I going to address? Where is so? All right, so here's the first time we're looking at, since I wanted to give this some time to be ironed out. We are looking at the main currency right now. This is Singapore dollar's relationship to the euro. And then I guess I should probably add this in as well. This is the US dollar's relationship to the Singapore dollar. Tight range on the lower side. Bitcoin. I'm still seeing this 440 area, guys, just so you know, for the question I just got on the coinage. I actually started watching a pretty good series on Netflix that just hit. It's called startup. It's 3 seasons of these guys form this cryptocurrency company called GenCoin. It's actually pretty cool. They actually do a fairly decent job in this show of highlighting at least the fairly instrumental role of venture capital in early stage investment in a lot of these companies. So if you guys want to check it out, it's a pretty good show. Yeah. And surprisingly enough, this is for the question I got on PLBY Group. This is the new formed parent. Done exceptionally well. All right, so I knew there was something I wanted to address real quick. Gold for the question on that. Remember, I've been talking about this lift off of this basing pattern and for some time. Just looking at the daily chart, we're still seeing this whole 1950 and the real bullish forecasts are back out there at the highs, provided the dollar keeps moving down lower, which typically rallies many of the metals. NZD CAD, question I just got on this daily chart. Notice we broke a big uptrend line, came back and tested that, back down. So it's anybody's game at this level. I'm seeing this whole 86 area as it's probably averaged out. What else do I want to address? Already go through this one? Did I go through the Frank? Hell, they're all looking the same these days. Daily chart up in new high territory. I'd say if we continue higher, this whole 2450-ish area is probably the next stop. Probably should stop and balance on this for a little while because notice each of these candles represents a weekly chart. We're certainly stretched outside. Probably this looks like maybe this is probably almost a 2 standard deviation. So we're really stretched in terms of the move. Just think of rubber band that trails the market and it wants to stay within the rubber band. And once you get pulled out, the rubber band gets stretched. That is the very basic concept of mean reversion, which many markets are. What else? Yeah, I think that's giving you guys a pretty good overview. So, I mean, if you really want to do some homework on this, take a look at candlestick analysis. It's going to help you. Because trust me, if you decide to get into any type of investing going forward, let me just stop sharing the screen here. I don't do enough on camera liveness, right? All right. So if you do a lot of investing, the key thing to having a diversified portfolio is just sort of view yourself like an institutional investor would, right? If they're running University of Texas Endowment, right, or the California Teachers Pension, which is CalPERS, so one of the biggest in the planet, right? As a chief investment officer for that organization, you have a whole team of people that need to do different investing. I always like to try and position a beginning investor as thinking in terms of that role, because once you build up enough wealth accumulation and or max out your retirement accounts, which would be the first step I would tell anybody getting into the workforce, or if you've done really well for yourself, at the very least, set up a Roth IRA. If you're a U.S. citizen, you can open an account at any brokerage. I would avoid TD Ameritrade though, because they're being absorbed by Charles Schwab at some point in the next 24 months, and I think it's just going to be a mess. So we're actually moving a lot of our clients to Schwab directly, proactively in anticipation of this. But you can open an account at any firm, set up a Roth IRA, you can put up to 6 G's in the account. You can't write it off for tax purposes, but it goes completely tax-free. But that's really is an important thing to have some sort of retirement accounts going if you're not actively contributing to some sort of employer's 401k. Or whatever the versions of that would be, in overseas. But outside of that, you're going to want to have diversification in your portfolio. At some point, you're going to want to own real estate if you don't already, right? And you're going to want to own individual stocks or ETFs that represent a group of stocks, or a mutual fund, right? Just if you're going to own a fund, just make sure you pay close attention to whether that fund has outperformed its respective benchmark or not, right? There's a lot of mutual funds that are actively traded on this planet that are crap, that charge a lot of their clients and their investors very high fees to not outperform an index. This is the whole argument behind way back in the days was, well, just invest in the spiders, for the large cap S&P 500 exposure, or invest in, the Russell for the small cap exposure, or, some sort of global index like the EEM, which is the Morgan Stanley Emerging Markets ETF, right? So you can utilize ETFs to hold a basket of stocks and be diversified, right? And then at some point, if you felt you've done well in all those areas, you may want to invest in other stuff, right? And just be real careful that you don't get too heavy in one particular area. I saw somebody the other day that had a Forex account. He had 700 or 800 grand in US dollars. And he was asking me a bunch of questions about some stuff. And I said, well, haven't you watched any of my previous stuff? He's like, yeah, I choose to be in Forex. I'm like, well, at some point that account's going to take just a massive clobbering. Are you willing to accept that loss? He's like, no, I'm not. I'm like, well, why don't you just diversify the account out, right? Do you owe anything in anything? He's like, well, I have a little credit card bill with 10 grand and I owe, 12 grand on whatever the car he had. I'm like, why don't you just pay that off? I mean, simple financial planning advice, right? Don't have a lot of debt. I don't believe in owing anybody anything. I got no money on credit cards. I own all my cars. I own most of my house. I'm moving to Florida, so hopefully that works. But I just don't believe in a lot of debt. I try and teach students to max out retirement accounts first. But I think, unfortunately, the big problem I'm seeing among millennials, in at least the risk management space, outside of the emotions that many of them can't handle this, is they just don't have the fortitude. They're thinking in terms of next week. They're looking at next month. And I'm really, as I talked about in Nashville Live, really got to look to the 3 to 5 year time frame. Make sure that's in your plan. Even though you may not agree with that, put it in your plan anyway. You read it enough times, I promise you, it's going to get ingrained in the subconscious in the back of your brain. And that is another important part of risk management, is teaching yourself to have the discipline, the fortitude, and all that, right? The other big problem I'm seeing is that somebody will come into a chat and not have a good week or good month and they're done, right? It's just foolish. I mean, I was watching a documentary of the Kentucky Derby, which is just a massive horse race in this country. It's like the Super Bowl, right? You win that, you win the Preakness, you win the Belmont, you win the Triple Crown, right? It's like the ultimate thing in sports, in many of these people's opinions. But some of these riders have fallen off their horses, damn near gotten killed countless times. I mean, the average jockey's broken a massive amount of bones in their little bodies. And I commend these guys, because I'll tell you, in terms of the sports world, this group is some of the toughest little dudes I know. And I wish I could teach students to be like some of these jockeys, because horse racing is incredibly dangerous. And just like trading, right? So you could be on the best horse, could be on American Pharaoh. It's one of the last Triple Crown winners, right? You could have been on the horse, done great, and then you decided to get lazy, right? Some horse kicked your horse and you went down, and both you ate it, right? That's investing. But these guys just get back up on the horse and start it again. My largest friend in terms of net worth, which has all been accumulated from trading, he puts probably 10, 12 hours in most of the week. It's accumulated about 9 million trading his own money. He has probably lost along that way at least $2 or $3 million in education. So, if you're concerned about a loss, learn from it, right? But don't let it hold you back. Come back to the game. Be more prepared. Have the fortitude to push forward. And I'll leave it at that. So with that in mind, folks, everybody have a great weekend. Be kind to each other. May the trades be with you.